Welcome to this week's edition of The Accomplished Woman with Cathy Mendell, the show for women who are serious about their retirement. I'm your host, Kristin Oakley, and with me is the woman of the hour, Cathy Mendell. She is the founder and president of Theia Financial. Cathy, my friend, I'm so happy to see you again.
It's so much fun to be here with you.
Oh, it's my favorite time of the week by far.
Yeah, oh good.
Well, and I learn new things about you all the time, and I was so excited to hear about your orphanage that you have over in Africa. So could you tell our viewers a little bit about that?
I'd love to tell them about it. So about 15 years ago, my husband and I had an experience where he went over there and the need was so overwhelming that he came home and said, we have to do something.
Yes.
And so what we decided to do is to help a fledgling little pastor who was trying to take on children. And we got involved. And the next thing you know, we had bought some property back and forth for construction, and we now have 58 children.
Wow.
And you know, you take these kids that have no hope. I mean, their parents are dead from AIDS or malaria or whatever, and they're living under somebody's porch or in a mud hut, and you bring them into the orphanage, and they have a bed, they have food, they have, and the thing they prize is their education. They want that so much. So we have 58 kids now. Since we've had it for 15 years, now we have children in college and in trade school.
Oh
Yeah, it's incredible. It's so incredible to see these kids being given a chance, and it's all supported by literally just by donations of people that find out about it. So
what a blessing. I've always believed that we are blessed in order to be a blessing, and I love that you're living that out, and that's so much of what you get to help people do as well, as plan for their retirement and plan for charitable giving and things that they want to do and support their passion projects. So I just think that's amazing.
Thank you.
Wow. I know you prepared another great show for our viewers at home today. We're going to be talking all about taxes. Now, here's the thing, as Cathy always says, it's not so much about how much you've saved for yourself in retirement, it's how you're going to be able to generate an income for yourself in retirement that's going to last you throughout your life. And taxes, unfortunately, can really eat into that, can they not?
Oh, absolutely. I mean, there's actually kind of an unfun fact that has to do with taxes, and that is that your biggest bill may very well be your tax exposure. It may be your tax bill. Just to give you an example about that, recently I was working with Linda, and we were crafting out her retirement plan, and she had done the spending plan. We had everything put together, and then I always run a tax calculation on all my clients' income sources, just to be sure that we're doing the best we can with where we're drawing income from.
Right.
Well, she had a pension and her Social Security, and as we added the small IRA withdrawal, that's all she wanted was just a small amount of money.
Right.
What she discovered was that her tax bill was going to be $17,000 a year.
Wow.
And this was on a $60,000 a year income.
Oh my gosh. Yeah.
She's single, which is not fair, but that's how that, the tax brackets work on single. It's always higher.
Right.
Well, $17,000 a year, that's like, what, $1,400 a month?
Yep.
$1,400 a month if she wasn't expecting. Just going to taxes. So when you are planning for retirement, you do need to, that's a really important part, because the fact is you have to know how much you have to withdraw.
Right.
In order for you to have the net income you're looking for.
Well, how does one go about even being able to calculate how much they're going to have to pay in taxes in retirement? I mean, there's rules of thumb out there, but that doesn't really apply here because it's so individually based, right?
Right. Well, when you're working and you're getting a paycheck, taxes are automatically taken out.
Right.
Okay.
Yes. So you don't usually see them,
you
right?
You don't see them. You know where you're at, but it's all paid, and at the end of the year, you have no big surprises usually. Okay.
Right.
When you're retired, you're having to do quarterly payments, and you're writing a check.
Yes.
And that stings.
And you're seeing it too.
And you're seeing it go out.
It's very tangible.
And it's coming right out of your investment accounts.
Right.
Or your cash, whatever you're paying it with.
Yeah.
So understanding how to control, you actually have more control in retirement over your taxes than you do when you're working.
And see, that's mind-blowing, because I think a lot of people don't realize that. They think, oh, this is just the way it is. I have to pay taxes. They don't know that there's something that can be done about it, right?
That's right. And so what happens with planning for taxes is that there's like 3 easy steps I would tell all of our listeners today to, okay, first is to add up your retirement income, look at all the sources you're going to be drawing income from. So that will be one of the pieces that we would be looking at.
Right.
Retirement sources are not all taxed the same way. And in fact, I think I want to talk about that for a minute. I like to call them tax buckets.
Okay. Yep.
In fact, I have a little illustration for you.
Perfect.
I have some water bottles, okay?
I love illustrations.
I don't have buckets, but I have water bottles.
Perfect.
Okay, I'm going to move my cup. So when you are drawing, when you have finally accumulated the assets that you're going to use for your retirement income, you're probably going to have 3 types of money, is what I would call it. You're going to have the taxable bucket.
Right.
Now, in here is going to be your savings. It's going to be now savings is not taxable, but the interest you earn on your accounts is taxable.
Yes.
Okay.
Yep.
It's going to be, you're going to have your investment accounts that are not IRAs or qualified money. So this would be money that you might have dividends, you might have interest,
right.
you might have capital gains.
Yep.
That's all of that you get a 1099 on at the end of the year, but you're not paying taxes on what created it, you're just paying taxes on the gains.
On what you've earned.
Right.
Okay. Yep.
Now, over here, what we're going to have is we're going to have our retirement accounts.
Okay.
Now, this has all been tax deferred. So what that means is you put the money in, you didn't pay taxes on it when you put it in there.
Right.
And so when you draw it out, it is taxed as ordinary income, just like your wages were. Okay, nothing different there, really.
Yep.
So everything that you draw out of that is taxed at ordinary income. The problem with that is that most of us who are in the age brackets of nearing retirement,
right.
What happens is that we were told that, oh, when you retire, you're in a lower tax bracket. Do you think people believe that anymore?
I don't think so. Not with the way things are going.
No. The chances are you'll be in a same tax bracket or higher. It could be higher. So what we want to look at with this is that the withdrawals that we take out of here, we have to understand that they're fully taxable. Now over here, we would call this our tax-free bucket. Okay? Everyone loves the tax-free bucket.
Yes.
Now this is the assets that you put into a Roth account.
Yep.
Now a Roth account, just for those of you that may not be that familiar with them, is that you pay the taxes on it when you put the contribution in,
right.
but your gains are never taxed.
Right, they grow tax-free.
And when you take money out, it doesn't count as income. So the beautiful thing about this is my goal for my clients is to look poor on paper. Okay,
right.
They might be taking income, but what ends up being taxable is what we're trying to do is control how they are, or how much is exposed to taxes.
Right.
So having a variety of a lot of people, what they have is they have their IRA, their 401k, and their Social Security.
Yes.
And that's what they have. Okay.
And that's just that one bucket.
That's just one bucket. You need the 3. So what can be in here? I didn't finish that. It could be municipal bonds that are tax-free, especially if you buy them in the state that you live in.
Right.
It could be withdrawals from a life insurance policy. A lot of life insurance policies have a cash value accumulation. Taking that money out is tax-free.
Right.
It could be maybe it's an inheritance, depending on what type of money it is. So there's lots of ways to organize this. But the key is to take your bottles of water, and here's your need, and you're pouring a little bit from each one to fill up the bucket of your income requirements. When you do it that way, you have the opportunity to actually be strategic about how you're taxed on your income.
And so that's how you can control your tax burden. And to your point, your question of, do most people think that they're going to be in a lower tax bracket? Well, the sad reality for a lot of women is we tend to live longer than men. And so for those of us that are married, have a partner, once that person passes away, now we're bumped up to that higher tax bracket that's known as the widow's penalty, right?
It is, and it's just tragic, to be frankly honest with you. That's one thing I would say. I'm a rebellious person when it comes to this, because it doesn't cost a widow or a single person less to live, typically.
For sure not.
But they're definitely paying more in taxes. So I have a client, her name is Connie, and she lives in Oregon. She's 66 years old, and I want to just tell you about how this actually plays out in real dollars.
Yes.
Okay.
Okay.
So Connie she's retired, and she wants $72,000 a year of income. Now she has 3 buckets of money. She has her Social Security, she has her 401k, and she does have a nice hefty savings account. Okay. So the question that she asked me was, if I just start withdrawing from my IRA, and she has an IRA that's ample, we can do it that way. what do I need to withhold for taxes? So we did she had $2,300 a month in Social Security, which is $27,600. We had to take $60,000 a year out of her IRA in order to end up with $72,000. Because that's how the taxes worked out. Her tax liability was $16,000 a year.
Right.
So then we stepped back and we said, all right, let's see if we can combine. If we can pour some from this one and from that one.
Yeah.
And so it's $27,000 a year Social Security, but we split that withdrawal in half. We took half of it from the IRA and half of it from the savings, okay? And that could also be a Roth. That meant we had to take out of her account $49,000 in withdrawals instead of $60,000, okay? Her tax liability went down to $4,700.
Wow, what a difference.
From $16,000 to $4,000.
Right,
okay.
a fourth of it.
A fourth of it, right? Now think about what the stress that took off of her investment portfolio. It didn't have to work as hard. Money's going to last longer, right?
Yep.
Now let's take it one step further.
Okay.
What if we had spent time removing the money from the IRA or the 401k and moving it into a Roth IRA? If we had strategically done that, and if you're saving money and you're still working, you can begin to shift your contributions to the Roth accounts that are offered through your retirement plans.
Right.
Okay.
Yep.
You might want to consider doing that because that money becomes really valuable. Look at how much that IRA or that Roth IRA or that tax-free money saved her. $12,000 a year.
Right.
That's a lovely, I mean, you might be paying some taxes on that money when you put it in, but I'm guaranteeing you, if you're contributing maximum, say you're putting in $20,000 a year into your retirement, and you're getting a match, that $20,000 is not going to be taxed at $12,000.
Right.
Okay, but it's going to matter later on.
Absolutely.
Okay, so if you did that, you take the Social Security of $27,000, then you take the rest of the money out of the cash accounts or the Roth IRA or whatever.
Right.
She has to take $44,000 out, but here's the deal. She has no taxes owed. She's absolutely tax-free. In all three cases, she still has $72,000 of income.
Wow. You're a magician, I've decided.
Right? A little of this, a little of that.
Right. That's amazing.
Yeah.
Wow. And I'm sure that that could totally change someone's financial future, being able to strategically plan on the front end, because otherwise these taxes are going to catch up with you later in retirement, for sure.
Well, they do, and especially as you age and when you get into the place where you're required to remove money out of your retirement accounts at age 73, as an example, you have to take required minimum distributions. I call that forced income. You don't have a choice anymore.
Right.
So that's another thing you really have to pay attention to. And I would tell you that the advisor that you're working with, these are the conversations you need to be having with them.
Absolutely.
It's not just if you're invested in stocks, bonds, mutual funds, and ETFs.
Right.
That's not the conversation.
Sure.
Okay, that's kind of a given that you're invested.
Right.
But the key is if I can save you $12,000 a year in taxes, I've just earned my keep.
Absolutely.
Right?
Yep.
And that's something that you need to be thinking about as you're working with someone.
Well, I'm sure the phones want to blow up after hearing this story. People are saying, Cathy, I want you to work your magic for me. So what do you want to tell to someone who needs to come in and really figure out, how this is going to work for them?
Yeah, so here's the thing is that when you're getting close to retirement, you need a comprehensive plan. You need a plan that's looking at your income, that's for sure. You need a plan that's looking at your investments and how they're supporting your income. But you also need someone that is well versed in how this all works together for taxes. Now, this person is not preparing your tax return. What this person or what our team would do for you is we are helping we're looking through the windshield instead of looking through the rearview mirror. And we're helping you orchestrate your tax. You are being in control of your taxes instead of being a victim of your taxes. You want an advisor that's looking at healthcare needs that you're going to have later. You want an advisor that's also paying attention to estate planning. That's what you need when you're looking at all of this. So if you're interested in that type of a relationship, and what we do is we have a 15-minute phone call, just 15-minute Zoom call, 866-724-4927, 866-724-4927.
Cathy, thank you so much to our viewers at home. We are going to take a quick commercial break, but you don't want to miss the rest of what Cathy has to say. We encourage you to call the number on the bottom of your screen, and we'll see you right after this.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter. the one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Welcome back to The Accomplished Woman with Cathy Mendell, the show that is for women who are serious about their retirement. I'm your host, Kristin Oakley, and Connie, I said Connie. Connie's who we were talking about, right?
Yes.
Before the break. No, Cathy, you were telling about Connie, and I'm so curious how that story played out in terms of how much was she able to save in taxes over a 20-year period as a result of the work that she did with you?
Yeah. So when you look at what we ended up doing, if she would have been just taking withdrawals, taking her Social Security and calling it good, her total tax liability over a 20-year period would be $320,000. That's a lot of money coming out of a portfolio.
Of money. Yes.
Okay. By just splitting the IRA in half and doing half of it from the IRA and half of it from a non-taxable source, you cut that down to $95,000.
Wow.
That is a $225,000 savings.
That's amazing. You saved her hundreds of thousands
Isn't
of
that
dollars
amazing?
in taxes just by being able to move things around strategically.
Exactly. And then if you go to the whole thing where you have no taxable accounts, everything is
we'll get rid of that bottle. Let's get that off the table.
Now we have our Social Security and we have our investment accounts, our savings, our Roth IRA.
Right.
We just saved you $320,000 because you're paying no taxes.
Amazing. Wow.
Yeah, that's a wonderful thing.
Yeah, for sure.
That makes money last.
And as your point, a lot of financial advisors out there aren't talking about these things because the reality is a lot of financial advisors who work for big box firms, they're actually not allowed to engage in strategic tax planning for their clients. But this is something that you do day in and day out for women.
Well, we do because it makes total sense. It's how you're using your money to live a great retirement. And why would I put you in a position where you would be paying $320,000 in taxes
if
that
you
didn't
don't
need to be
have
paid?
Exactly, right? We want to pay less to the IRS, not more than we have to. Yeah, absolutely.
So I would tell you this, is that when you're thinking about retirement, I want to help you identify how do you know if your advisor knows these areas, right? How do you know if they're well-versed?
Yes.
And what I would say is that it's what they're talking to you about. That's how you're going to know. Because if you're within 5 years of retirement, the conversation should no longer be only about your investments. Now the conversation needs to be broader than that.
Yes.
This is when you want your advisor to really go to work for you. Okay? So you need a plan. It needs to be a written plan.
Right.
And every time you come in to see them, the plan needs to be updated. And I'm not just talking about how much money you have now. I'm talking about all of the things we just mentioned a second ago, which is your income strategies, and this includes the tax planning, which includes your investment strategies, and this includes market risk and timing and all of the different resources there. It also includes your tax planning, and we just gave you an example of that. But what happens when these conversations don't happen is you have an investment plan, but you don't have anything else. And they matter. These other areas matter. Healthcare planning. Some people say to me, why would your advisor talk to you about healthcare? Well, you have to understand what your responsibility is with healthcare. See, Medicare doesn't pay for anything on your head.
No, it doesn't. It doesn't pay for vision, dental, right? None of that. A lot of people don't realize that.
They don't know that. And so they have, they retire, they have a dental bill that's $10,000. It was unexpected. That's the money they were going to take a trip on. Right? So when you're doing income planning, you have to be able to explain that. The other piece to that is what I call old age income. You've got to have a plan for what's going to happen when I'm 85 and I need help.
Yes.
And I want to stay in my home, but I need somebody there every day.
Yes.
What does that cost? Maybe it's $2,000, $3,000, or $4,000 a month. Okay. If you end up wanting to go to an assisted living, that could be $8,000, $10,000. It just
for
depends.
sure, easily, right?
You need resources with that,
right?
And it's a conversation you want to have during your planning when you're approaching retirement, not when you get there.
Right.
For
sure. Well, and that's such a hard thing because I think a lot of people don't like to think about it. But I'm sure you hear from a lot of women. They're saying, "Well, I don't want to be a burden to my family or my loved ones." Right? I mean, that's a huge concern.
Even when you're married, if you're single, it is an issue because And you may be single and have children, or you may be single and have no children. And then it's something you really have to think about.
For sure.
Sometimes it's not a cash account that the person has. Sometimes it's the equity in their home. And they're saying, I know I'm going to be downsizing. And so, okay, but we have a plan now.
Yes.
We know that you're going to be okay.
Right.
Instead of just, now what?
Yes.
Okay. The estate planning side of it's really interesting as well, because you have your trust. Should it be a living trust, a revocable trust? Do you have all of your documents in order, your power of attorney? Anything can happen at any time.
Right.
Where none of us are, you know, all of us have a day,
Yes,
right?
we do.
And so having those things figured out ahead of time is really important.
Well, if someone's watching today and they're going, oh, wow, I'm working with a financial advisor, but they're not having these kinds of conversations with me, what do you want to say to them?
I want to say, give us a call. What we do is we encourage you to just book a Zoom call with us. It's a 15-minute call. And on that call, we're going to talk about where you are, where, you know, I want to hear your financial story, but I also want to hear about your dreams for the future. What does retirement look like to you? What are you thinking about? When is this going to happen? When would you like it to happen? And from that call, we'll have an opportunity to decide, is this something we want to pursue together? So give us a call at 866-724-4927.
Kathy, thank you so much. To our viewers at home, we are going to take a quick commercial break, but we encourage you, pick up the phone, call the number on the bottom of your screen, 866-724-4927. You're also welcome to scan that QR code. Simply take out your smartphone, take a picture of that code. It will take you over to a landing page, and it'll ask you a few simple questions and get you connected to Kathy and get a complimentary call on her calendar so that she can meet with you and see how she can serve you. We love story time with Kathy. She's got no shortage of them. When we come back, we're going to hear how she was able to help someone else. Stay with us.
When was the last time you saw your financial professional? Are you getting the most out of the strategy that was created for you? Although you've done a great job finding someone to help plan for your future, are you 100% sure that you were given the right strategy? We can help answer these questions and more with a complimentary second opinion evaluation. We will take a look at what you have in place and then help determine if you're well positioned to get the most out of your future retirement income. In the event that it is not, we can help by making suggestions and showing you how to get on the right path. You wouldn't get just one opinion when it comes to a major health decision, so why would you treat your most important financial decision with such disregard? Call today for your no-cost, no-obligation second opinion evaluation to see if you're getting the most out of your retirement income plan.
Welcome back to The Accomplished Woman with Kathy Mendell. I'm Kristin Oakley, and another great show we are having today, Kathy. And one of the things I love about talking with you is you have so many real-world examples of how you've been able to help women navigate through all these different elements. So I was curious, I would love to hear some more solutions of how you've helped people navigate specifically their taxes as part of their comprehensive financial plan.
Sure. You know, sometimes in the discussion, it is taxes, and sometimes it's other things. So first I'll tell you about the one that had to do with taxes.
Okay.
So I have a couple in Idaho, and they've sold a business, very financially well set. And she had a fairly large IRA. And that IRA, she's young, she's in her late 50s. She doesn't have to take withdrawals from it till she's 73.
Okay.
Right?
Right. Yep.
So we did some calculations. I said, let's put a modest growth on it. I mean, they are not conservative investors. They're a little bit more moderate to aggressive. But I said, let's put a modest growth on it. So we looked at that over that period of time, and it would be about 1.4 million.
Okay.
Well, first of all, they don't need the income. Okay. And I asked her, I said, you know, Linda, what do you want to happen here with this money? What's important to you about this account?
Right.
She goes, I really want my daughter to have it. Okay. So here's the tax law piece of this.
Yeah. Oh boy. Here we go. Right.
So if her daughter receives the IRA, when she gets it, she has only 10 years to distribute that IRA.
Yep.
That's the new tax rule on inherited IRAs.
Yes.
So if you have 1.3 million and you have to distribute it over 10 years, with growth, you're probably going to need to take out about $180,000 a year. Now, she's an accomplished woman in herself.
Right.
So she's already making a great income. So
Yep.
what does that do to her tax exposure?
Bumps it
Bumps
right
it
up,
way
right?
up. Now, what that means is that she's going to lose about 40% of it.
Wow.
Well, that's not okay.
No,
Okay.
no, and that's so sad when she thinks, I want to give this to my daughter, but here's the gift minus 40% of it, right?
Right, exactly.
Yeah.
So instead of 1.3, we're going to get, 800, which is nothing wrong with 800,
No,
but
for
why
sure
give
not.
it away?
Right,
Right?
yeah.
So after thinking about it, I came back to her and I said, you know what we could do? Let's do a life insurance policy on yourself for the benefit of your daughter. And let's set it at the amount you want her to get from this account. So that's what we did. So now when her mother passes, she's going to inherit this IRA, quote IRA, she's going to
Right.
inherit this life insurance for $1.3 million.
Okay.
Tax free. So she actually gets the money. But here was the interesting thing, they don't need the income. So we also talked about qualified charitable distributions.
Yes, QCDs, right?
QCDs. So what she can do with that is, she can't do that till she's 70, but at the age of 70, she can start taking large chunks up to $100,000 out of that and giving it to the charity, and it doesn't count as income.
Right.
Their situation is they have a tax problem, okay, because they have a lot of income.
Right.
So adding another $100,000 to the top of that by taking withdrawals, even if they took withdrawals and lived on that money, it's still taxable. What
Yep.
we were trying to do is find a way to pass this money to her daughter and reduce the taxes. So in the meantime, we can do a donor advised fund where they can shift some of that money over, hold it there, give it to charity over time, and take the tax write-off. So there's a lot you can do.
Yes, for
There's a lot
sure.
you can do. So one more story. Do
All
I
right.
have time for one more? Okay,
Yeah,
this
we
will-
have
I'll
about a
make this
minute
quick.
left. Go for
Okay.
it.
So this was a gal, she was almost 80 years old.
Wow.
And we were talking through her estate, really looking hard at the beneficiaries. And she had 5 grandchildren. And she said, I want these grandchildren to each get $50,000. Okay, so $250,000.
Right.
So I thought to myself, okay, she has $250,000 she wants the grandkids to get. What if we did another life insurance? What if we did a life insurance on her? I wonder what we could get for $80,000. Well, she was able to get almost $400,000 worth of coverage.
Wow. Okay.
So we took $80,000. The grandkids are going to get $400,000 now. The $250,000 can then be held aside for someone else.
Right.
But I just thought, leveraging the tools that are out there. So
Yes.
many people, you can't find this stuff on Google.
No, you can't. In fact,
Right.
you'll find a lot of misinformation and a lot of just gobbledygook and stuff that will confuse you, right?
So what I would encourage you is, if you want to see a bigger picture of your money, if you want to have a better understanding of your tax exposure and really make the most of the assets that you have saved, give us a call at 866-724-4927. It's a quick 15-minute Zoom call, and it'll give us an opportunity to learn more about you and hear your financial story and have the opportunity to talk about some solutions maybe to your situation.
Cathy, thank you so much. It's always a joy to be with you. And to our viewers at home, thank you so much for watching. We hope you found today's show to be valuable and very helpful. We encourage you, call the number on the bottom of your screen, 866-724-4927, or scan that QR code to get your time on Cathy's calendar to have your own complimentary 15-minute Zoom call. Thanks so much for watching, and we'll see you next time.